I think it's really about the dollar peaks when the Fed has peaked and when the Fed has essentially broken something. So the other central banks are looking at their currency. Bank of Japan has been an exception until recently, and realizing they have to match the U.S. the Fed where it's at its pace of hikes, and that's what we're seeing this week. Sort of 75 basis points is the new 25 basis points. You have the Riksbank from Sweden today; they're even talking about 100 basis points potential there. Swiss National Bank, there are a number of banks that are hiking 75 basis points, but I don't see the dollar peaking for the cycle until we get to the sort of peak, getting towards anticipation of that peak terminal rate being wherever that peaks out. I argue around 5%, and then we see the anticipation of recession and the Fed eventually starting to roll over and stimulate again. We're just not there yet. So it's all about the direction of the Fed, and is it getting tighter? And I think the dollar follows that trajectory.
John, very ungentlemanly, I mentioned your longevity in these markets, but it's called experience, so I'm going to draw upon that as well. Have you ever seen the question over credibility of the central banks, given their misanalysis of the situation over the last 18 months, more tested than it is now? If so, do they have any credibility left? If so, do we trust what they're going to do next on interest rates?
Well, I think arguably yes. If you look at where Bernanke was back in 2007 and predictions around what the Fed was going to do or what the economy was going to do in the teeth of that, what was a coming and galloping financial systemic crisis. I think the Fed has long shown that it is hopeless at forecasting the economy. I think that remains the case. And it really, are the central banks largely irrelevant. They're simply reacting to the incoming situation. And I think for the cycle, it's going to become there's going to be a bigger focus on the fiscal side than on central banks, which are rapidly becoming an auxiliary to the reality on the ground and whatever the fiscal side does. So maybe eventually we have to say, do central banks really matter that much, except as a function of reacting to what's going on in the background, rather than being the masters of the universe as they've been called before.
Yeah, from master of the universe to, and I think I'm quoting you right, hopeless on predictions and more irrelevant. John, that's really amazing what you just said, so I'm going to dig into it a little bit deeper. If we are then going to fixate, start looking more at the fiscal side, I don't know where the headroom is in this current era. I know where it was when interest rates and inflation was zero. I don't know where the headroom is when you've got 240% debt to GDP in Japan, when you've got a growth and stability pact in Europe that is basically now going to be admitting that 100% is the new norm, with a lot higher for many other countries as well. What happens on that fiscal front if that is where we're now going to focus?
Well, the sovereign has to be funded. So in the next recession, if we imagine a government that is unable to fund itself via tax revenues, you have to have what? The central bank funding it with printed money. So I think that's why we're in a new inflationary cycle, because the monetary policy side becomes an auxiliary to whatever the fiscal demands are. And that's what we'll see once we're somewhere in 2023. In the case of the U.S., much deeper than I think the market has anticipated before. We see the U.S. in recession, and we see the EU in recession already over this winter. So that's what I see: much higher reset of inflation due to many factors. But the sovereign will remain funded, and who does that? It is the central bank.
John, can I round out the conversation and ask you about the Bank of England later this week, because the market is trying to work out whether we get a similar sized move, 75 basis points to the Fed, whether we're in this catch-up mode. But it doesn't feel as though Andrew Bailey is the type of central banker here that's going to be swept up in the euphoria. I think they're saying play the man, not the game, and effectively here, if you're trying to price around Andrew Bailey and what he will try and achieve at the central bank here, what's likely in your book?
Well, Andrew Bailey has been a very difficult one for this market to price. We've seen that since late last year, and I guess that remains the case. But let me just say that if the Bank of England fails to hike 75 basis points, let's shield our eyes for what's going to happen to the pound here. The Bank of England has to go 75. It has to match its global peers here. When we've seen cable trading at the lowest level since 1985, it would really be quite a tone-deaf performance from the Bank of England if they don't go the 75 basis points at this week's meeting. So that's firmly what I expect. I wouldn't be, it's possible they go 50, but I really think it's more likely they do the 75 basis points.